Let's trade housing. New home sales rising again, maybe on pace for the best month in nearly 10 years. Does this make the biggest homebuilder ETF a screaming buy? Aaron Gibbs and Max Wolf are your Trading Nation team today. Aaron, let's talk about this XHB, although I will caution our viewers that this is one of those ETFs, despite the name, the homebuilder ETF, the biggest holding in the ETF is actually Tempur Sealy, the mattress company. So it's kind of not really a home building ETF, but what's your take?
Yeah, so that's a really good point. Is there's actually a really big consumer discretionary component in this ETF, like Tempur-Pedic, Williams-Sonoma, Home Depot, all of those guys. But we actually really like this ETF for a few reasons. One, the average upside, according to Wall Street analysts, is about 9.5%. So we're still looking at good target prices above where it's trading now. The valuation is 16 times forward earnings versus 18 for the S&P, and we're looking at an average earnings growth of 26%. Again, a lot of that not just coming from your typical home builders, but also from the expected rise in the consumer discretionary, which is one of the strongest sectors for that specialty retail. So across the board, we think that this is still a good place to get in and a good value right now.
Okay, a good value right now, Max Wolf. So says Aaron Gibbs. Doth thouest agreeth?
I trieth. So I think that this is a pretty reasonable and nice risk-reward trade-off if you want to buy basic consumer resiliency and macro stability. I'm not sure you want to buy those things, but if you do, this is a good risk-adjusted way to do it. Still a lot of interest rate sensitivity here, and you're betting that the consumer kind of stays robust into the fall and that the risk on trade continues into the fall. Truth is, I've thought that trade wasn't really a good idea, and I've been stone cold wrong. And so the folks who didn't think what I thought did better, that's making me cautious. If you want to be macro sensitive and interest rate sensitive, this is a very good way to do it. I'm still not 100% sure you want to be those things, but if you do, this is the right cool kids to hang out with if you want to do that.
Yeah, and again, this is one of those ETFs that is a good lesson. Know what you own. We've said it a lot because, again, despite the name, for some reason, a mattress company is 5.5%, the biggest single weighting in this ETF. Max, quickly that aside, what about homes in general? Are you optimistic on housing, new, existing, whatever?
Yeah, so in the short term, we think housing does look pretty good. There's kind of not enough stock. There aren't enough houses for sale in the existing home stock, and we're seeing some of the weakness in June come forward as big strength in July. As long as interest rates stay low, we think that's a bit longer, and folks are trying to get in there because the house prices have been weak despite the short supply. For the next 3 or 4 months, it looks like a bright spot.
Okay, bright spot. Max Wolf and Aaron Gibbs, they both kind of like the XHB and housing. Thank you both.